Great. Welcome to Digital Asset News. Take a top stories in crypto, making out bite-sized pieces. So today, there's a ton of stuff to go over. So let's just jump right into it. We're going to talk about my day off yesterday and what's going on. I'll also take a look at market and as far as balance and what that means. We're going to take a look at some Bitcoin signals, accumulation signs, but it could go lower. I'll also talk about how Coinbase just received 2 new lawsuits, and I'm wondering if they changed their terms of service. Then we'll take a look at how Binance and WazirX are feuding. We'll also take a look at the good news, which is Polygon and Voyager. So let's just jump right in, huh? So today is a pretty great day. It's Saturday, and I got to tell you, before we get into the markets, yesterday I had to take a day off because I'm just not feeling right. I don't know what is going on. I had to go to a couple doctors, so we'll see what it is. But it's like this, like a wave of fatigue just kind of comes over me. I thought maybe I'm just working too hard, so I took the day off, but still there. So we'll see what the doctors say and go from there. But just expect me to be taking more days off as time goes on. So that's really what's going on. I missed yesterday's DCA show over there with Ben and James, but it looked like a good one. So go check that out. Anyhow, the market today, even though I'm a little bit tired, you got to get things done. Doesn't matter. Bitcoin and everything else is playing pickleball. It's like back and forth. So in the last 24 hours, we're looking at 1% up, 7 days, 3% down. Ethereum 2.6 up, 7 days, 2.2 down, and just everything around. I mean, some are up, Binance and XRP and 2.3 and 1.7 for Chrono, but it's just all over the place. I think everything's moving sideways. Avalanche, congratulations, Avalanche holders, and so on and so forth. This just really comes down to what I like to talk about as far as balance. And when I talk about balance, as far as portfolios, when something goes down, you want another part of your portfolio to go up. And it's the same thing with, doesn't matter if it's crypto, if it's real estate, if it's land, if it's stocks, bonds, precious metals, whatever else. You kind of want to just kind of balance things out and just kind of spread your wealth around. That's what I've done here with mine. This isn't investment advice, just something that I've done. More specifically, I've done a lot with, or some things with Masterworks, a very small percentage of my portfolio, 5%. And this is called fractionalized shares of artwork. And I've only got 2, Banksy and a Basquiat. I have no idea what a Basquiat is or who he is. Apparently he's a great painter. I have no idea. But the thing is with fractionalized shares of artwork, rich people don't care if there's an up market or down market. They could care less. And to prove this point is that my Basquiat is up 40% since I purchased it in October 30th, 2021, which is not too bad. And if you think about it, I thought, well, is this normal? Well, for Masterworks, it's pretty much an average between 27 and 32% annualized returns for the last 4 that they've sold, everything from a Banksy to a Brown. Again, and I know what a Banksy is, but the rest I have no idea. And this is what we talk about uncorrelated. Masterworks compared to like these losers, Russell, NASDAQ, and S&P. You know, Masterworks, what they're selling is up 15% as composed of those other ones. And another thing that I like about this, because we're in a pretty volatile asset class, is that these are securities. And every painting, it is registered with the SEC. So look, if you want to learn more about it, then you don't have to, but there's a link in the description. I did a deep dive, looks like this. And also there's an affiliate link. Now, if you can't stand affiliate links, don't use it. Go right to masterworks.io and check it out. So that's what we have as far as like the balance, just something that I'm doing, not what you have to do. Now let's take a look at the signals. So this is what I like to use. It's called Look Into Bitcoin. It's a website that's 100% free, but I signed up for it. You can get alerts like this, which I think is pretty nice because I got a lot of things going on, especially with everything that's going on lately. So with this one, I was like, the Puel multiple is exiting oversold zone. So I like these things, so it kind of keeps me on top of stuff. And this is what we got. Puel's multiple, if you don't know, and I didn't until I got into this website, it's all about Bitcoin miners. Bitcoin miners are sometimes referred to as compulsory sellers due to their need to cover fixed costs of mining hardware in a market where price is extremely volatile. The Puel multiple is calculated by dividing the daily issuance value of Bitcoins by the 365-day moving average. And the average, as it comes out to, is, if you can take a look here, that every time it goes below this green line, and there's multiple different charts that you can take a look at as far as like accumulation zones. These are like the great accumulation zones. Last one was May 22nd, 2020. Before that, December 9th, 2018. Before that, 2015, and of course, 2011, but who was around from then? And we were just there for quite some time, and it just peaked above the accumulation zone. Does that mean that it's a bad time to buy? Probably not. If we take a look also at the rainbow chart indicator, again, another great one to take a look at if this is a time to accumulate or not. We are down. Let me blow this up so you can see it. See this blue? It's called the fire sale. We've been in there since June 13th or so, and we just peaked above it, and we're in a buy zone. And the next level is accumulate. Next level above that is still cheap. The next level is hodl, and is this a bubble, and FOMO, and so on and so forth. So when I take a look at these things, and I know that there's a big difference between what I do and what, say, a day trader might do, or swing trading. I am an investor. So for me, when I take a look at this, if you are a day trader and you're looking at this and going, this is not the time to buy because we're in a descending pattern, descending wedge, or whatever the TA people are into it, that's fine. But that's not what I'm here for. I take a look at it, I think to myself, is this inexpensive right now? Is Bitcoin inexpensive? Is Ethereum inexpensive? Is everything inexpensive or cheap as opposed to now compared to what it can be in 2, 5, or even 10 years from now? And I got to tell you, I think when I look at these charts and I see what historically we've seen, I think this is actually a pretty good time to accumulate. Now, that's not financial advice. That's just where I'm going. Anyhow, let me know what you think about that in the comments section. I'm sure that'll be good. Now let's talk about Coinbase and 2 new lawsuits. So sometimes when it rains, it pours. And Coinbase, they've already been hit with selling unregistered securities. They've already gone through to the SEC and talked to Gary Gensler and said, can we do a lending program? They're like, no, if you do it, we'll sue the pants off you. And now they got 2 new lawsuits. But there's a twist. And I'll get to that in a second. So this one here, this is what's going on. So 2 additional lawsuits. On Thursday, New York-based legal firm Bragger, Eagle, and Squire revealed that it will be suing Coinbase for making deceptive claims about its business practices. And then some Pomerantz LLP has also filed a claim against the exchange, alleging that it is entitled to compensate for any losses incurred as a result of the defendant's violations of federal securities laws. Again, once the SEC gets involved and said, you guys are selling unregistered securities, it kind of opens up the floodgate for other people outside for civil lawsuits. In both complaints, plaintiffs claim that Coinbase made fraudulent and deceptive representations regarding the company's business, operations, and compliance efforts between April 2021 and July 2022. According to the complaints, Coinbase neglected to disclose that client crypto was kept in escrow at Coinbase, making it part of a bankruptcy estate subject to bankruptcy proceedings in which customers would be treated as general unsecured creditors of the company. If you've been following everything with Celsius and Voyager, you know how damaging that can be. So just let that sink in for a second. But there's a bright spot. Furthermore, and this is just a throwaway, Coinbase reportedly refused to disclose that it permitted U.S. citizens to trade digital assets that, despite its knowledge and complacency, required SEC registration as securities. Again, debatable. Debatable if any of these are securities or not. And this would lead me to another article, Business Wire. And it goes back to that whole point about the disclosure. And if the crypto that you have on Coinbase would be considered part of the community and they can use that and you don't get anything as far as viability in a bankruptcy. This is an article on May 10th. In its quarterly report for the first quarter of 2022 release at the market's close, Coinbase disclosed that because custodially, that's a word, held crypto assets may be considered to be the property of a bankruptcy estate. In the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors, meaning whose possession is it? Not yours. Following disclosure, the price of Coinbase's Class A stock fell $19 per share, or 26%, to close at $53. Just so you know, right now, today, the stock price for Coinbase is around almost $100. I think it's like $95. Check me in the comment section. But that's probably because BlackRock and them are teaming up for custodial services for their institutional investors with their 10 trillion assets under management. So the question then is, why would BlackRock do that if the crypto then is left up to Coinbase in bankruptcy? Hold on, I'll tell you. So following this, in a subsequent tweet commenting on the disclosure, Coinbase's CEO, Brian Armstrong, stated, "We should have updated our retail term sooner, and we didn't communicate proactively when the risk disclosure was added. My deepest apologies and a good learning moment for us as we make future changes." So that was in May 2022, usually about a couple months or so ago. So the question then is, well, if that's what's going on, did they change anything? So I took a look at the user agreements. I did a search for bankruptcy. There was nothing there. I took a search for custody and property and ownership, and this is what comes up. And there's a link in the description so you can verify this. Ownership. Title to supported digital assets shall at all times remain with you and shall not transfer to Coinbase. All interest in digital assets we hold for digital asset wallets are held for customers, are not property of Coinbase, and are not subject to claims of Coinbase's creditors. Exact opposite of what the other part said. As owner of the supported digital assets and digital asset wallet, you shall bear all risk of loss of such supported digital assets. None of the supported digital assets in your digital asset wallet are the property of or shall or may be loaned to Coinbase. Coinbase does not represent or treat assets in users' digital assets as belonging to Coinbase. So I don't know when they changed that, but that's what it is. And I couldn't find the one before that. So if someone knows something other than what I just laid out, let me know. But it seems like it's not a part of Coinbase anymore. But that will, just to sum all this up, it doesn't even matter. If you don't want to go through the whole rigmarole and go through that, just go through the rules. These are my rules, not to be your rules. But this is what I try to live by. And investments, never invest more than you can afford to lose. And just think to yourself, it's all gone. When you think to yourself, it's all gone, then that means that when you're thinking to yourself, I'm going to put my entire life savings into Dogecoin because it's going to go up by 10, 20, 30%, and I can do this. It'll make you stop and go, that's stupid. Don't do that. The next one is everything's a scam. Everything's a scam. Treat everything as a scam until proven otherwise. You'll be a lot happier person. You'll be a lot richer. Next one is nothing on exchanges. Don't leave anything on exchanges that you can possibly get away from. Like I still leave a little bit on exchanges. It's true, but I try to shoot for 0%. Next one is no leverage. Don't take leverage. 25, 50, 100x is kind of crazy. And the last one is take profits along the way. No one ever went broke taking profits. So that's in a nutshell. I think it's news that is nuanced. And speaking of that, let's get on the next piece. Binance and WazirX. There's a little controversy, and this one is really take your crypto off as soon as possible. So here's what we got. WazirX is an exchange in India. India's financial regulators raid the director of Binance-owned crypto exchange and freeze funds over potential fraud and money laundering. Oops. So the exchange is accused of helping 16 fintech firms launder money through crypto transactions. Authorities froze, I think this has got to be billion, but 8.16 million of the exchange's funds, according to Reuters. Okay, 8.16 million, which, I mean, for the average person is pretty big, but I don't know about that for an exchange. Anyhow, WazirX is India's largest crypto exchange, was acquired by Binance in 2019, and that's actually debatable. We'll get to that. Scrutiny over WazirX comes amid a crackdown in India's fintech scene with ongoing investigations for predatory lending practices. Regulators have identified 16 Indian-based fintech firms they suspect of purchasing crypto assets to launder their money overseas. And to clarify this is what CZ Binance put out. Whoops. Let me go back. And he says like this. He goes, look, I want to make this very clear. If you have funds on WazirX, you should transfer it to Binance. Simple as that. I don't know if you can do that. I don't know if Indian residents can transfer everything to Binance, if that's even an option. If you're able to do that, like me, like I'm in Texas right now, I can't use FTX, even though it's available to like everybody else in the States, just not Texas. But he says, if you got a chance, transfer it. And he states, we could disable WazirX wallets on a tech level, but we won't do that. And as much as debates we are enduring, we won't hurt users. And this is what it comes from. This is Nishal Shardiam, nailed it. He is the founder of WazirX India, Crowdfire. And this is what he states. WazirX was acquired by Binance. Zanmei Labs, an India entity owned by me and my co-founders. Zanmei Labs have license from Binance to operate crypto pairs. Binance operates crypto-to-crypto pairs, processing crypto withdrawals. And this is what CZ says. Binance provides wallet service. WazirX domain is transferred to our control. We were given a shared access to an AWS account. We could shut down WazirX, but we can't because it hurts users. Binance does not have control on operations, including user signup, KYC, trading, and initiating withdrawals, as stated earlier. WazirX's founding teams control that. This was never transferred despite our request. The deal was never closed. No share transfers. Wazir funding team maintained control of the operations of the platform. We, Binance, were never given data or control of the user's KYC. We'd love to work with the regulators to fix these issues. And that's pretty much it. So that's an interesting twist to where I believed that WazirX was bought and totally controlled by Binance, but it looks like maybe that's not it. So another step back for the old crypto as we get labeled as money launderers and nonsense because of this going on. But we'll see how it all plays out, because who knows, maybe this is just a misunderstanding. Anyhow, that's all the bad news that's there. Let's get to some good stuff, huh? So the good news. There's always a little good news. First part's Polygon. Polygon layer 2 solution for Ethereum, I think, is going to do pretty well. And this was just put out a couple hours ago. Polygon at Disneyland. And we'd already talked about this, about how Disney chose 6 different projects in their accelerator program, and they were the only blockchain one. But it wasn't just that. There was some other couple of them. So Polygon is among 6 companies. And here's the thread. Polygon is the forefront of Web 3.0 innovation. And Walt Disney realizes it. And this is what they're going to do. Recently announced a list of 6 companies. 2022's batch is focused on futuristic tech, including Web 3. Disney's Accelerator, because I didn't know what it was. Disney's Accelerator is a program to accelerate the growth of the top innovative companies. Disney helps them with investment capital. That's nice to grow. Gives them access to co-working spaces at Disney's creative campus, and provides mentor guidance from top Disney execs. Look, it's not what you know, it's who you know. And it's all about being able to scale. And if you can get somebody, I don't know, as big as Disney to kind of help you, lead you by the hand to bring you into this, a lot of different opportunities, so much the better. So then let's see. The plan B for Lugano. OX Polygon is adding crypto adoption in a Swiss city. I didn't know. Helping become Europe's crypto capital. Also, payment providers like Stripe, which I use, which, by the way, is ripping me off hand over fist, 2.9% plus 30 cents for each transaction. I pay thousands of dollars every month and for Stripe. Maybe they could help them out with that. I don't know. This partnership, payment providers like Stripe, this was back in May, and tech giants like Meta and Facebook, and now with Disney. So you got Meta, Facebook, Stripe, and Disney. They've all picked Polygon. So I know we're in a bear market, but it looks like they're laying down some pretty good track for the inevitable bull run, which I think is going to happen in 18 to 24 months. So we'll see. So that's one part of the good news. And then the second part is Voyager. So this is from their the court presentation materials for their second day presentation. And it looked like this. So if you haven't already heard, a couple of good news out of that. Chapter 11. First of all is this. There are, instead of the handful, they've got 88 potentially interested parties contacted, 46 parties executed non-disclosure agreements, and 22 parties active in the marketing process. So it looks like there's a lot of bidders on intellectual property and the different assets that is in control of Voyager right now. So may the best person win. And then there was something interesting, though. I will say this, which was the FTX letter which they pretty much rebuked and said, look, FTX came out with a very weak offer, and people were saying, well, it's going to be great, it's going to be great. But as they can state here, customers, let me read the whole thing. Alameda FTX has purchased Voyager's crypto assets and crypto loans at fair market value, which would move the crypto into its own account and move the cash value of such assets and loans onto FTX's platform for distribution to customers. That sounds pretty good. They're going to take all the crypto assets that were there and hopefully to make us whole, but no, it's not what's going to happen. Customers can elect to open an account with FTX and receive their share of the cash to an FTX account. No customer will be made whole under the proposal, nor will any crypto be returned to customers under the proposal. So it just seems like maybe that was a little bit of a cash grab. So that's not so great, but there is some good stuff. The concern was customers won't receive cash held on Voyager's platform. Voyager filed a motion with the bankruptcy court to release cash from the FBO account, Metropolitan Commercial, to its customers. If approved, Voyager plans to release funds as quickly as possible. And just so you know, that was this. August 11th is when you'll be able to withdraw your dollars from Invest Voyager. No, not USDC. That's just US dollars. And then coming back here, Voyager's advisors are engaged in active discussions with over 20 potentially interested parties. If approved, the bidding procedures motion will provide a timeline for an auction and sale to a strategic third party in the event that Voyager, in coordination with the committee, pursues a sale transaction. Let's hope they do. Maybe it'll work out. And then there's the last two things, which I thought was interesting, because everybody was up in arms about the SIPA, the SIPC, and Voyager should have commenced an SIPC liquidation, which was a big thing for, I think it was a couple different YouTube videos, which stated that they should have done it that way so they could have been immediately liquidated. And why didn't they do it? Well, it's because Voyager is not a member of SIPC. Membership in SIPC requires approval from FINRA, and FINRA historically has declined to approve digital asset brokers like Voyager. SIPC denied Voyager's applications in 2018, 19, and 20. Didn't know that. There we go. And the restructuring process will take years, and they're saying, no, Voyager's Chapter 11 case will not take years. Subject to regulatory approvals, Voyager plans to embark from bankruptcy in Q1 2023, which is kind of like right around the corner. And that is what is going on today in the news. So I think it's positive, but we'll see how it all works out, and maybe the timeline will work out. So look, that's it for today in the news. If you want to stick around, we'll do Q&A. I'll try to answer all the questions the best of my abilities, and we'll go from there. But thanks so much for sticking around for the news. I appreciate it. Let's jump into a little Q&A and go from there. Man.